Dear participants, I'm glad to welcome you on Bosco Online Marathon. My name is Kateryna Druzhynina, compliance specialist at Custom Solution Group. Our team is trusted to organize a range of services to achieve long-term goals of high net worth individuals. Our services include strategy formulation and management of high net worth individuals' wealth, protection of their interests, and welfare support. The competence of my team includes banking, investment activity, legal assistance, tax consulting, concierge service, and personal assistant. So today I would like to share with you the topic that many are concerned about, if or when banks compliance teams may want to review their ban lists on businesses which they consider to be risky. Traditionally, high risk was used to a narrow niche: gambling, all things adult-oriented, or selling firearms. But it may come as a surprise for you today to discover that your business is considered a high-risk category. So segments of new economy like trading cryptocurrency, creating online content, selling contemporary art, or even building e-commerce platforms can raise red flags for traditional banks now. One may find it extremely time-consuming and ineffective when trying to open the bank account for business or even for ultimate beneficial owner as individual for any business that compliance teams of the banks consider as high risk. As we know, technology has dramatically changed the ways people make money today and build wealth today. It is creating new industries and business models. The global, for example, cryptocurrency market size was valued at $1.49 billion in 2020, and it projected to reach $4.94 billion by 2030. Most generation businesses are labeled as high risk, which limits their access to banking, sometimes significantly. Traditional banks find it too demanding and resource consuming to work with them. Banks do not start or break relationship with companies involved in what they perceive as risky business. But I want the participants and the community, compliance community, to think if maybe we should do a step forward to the new businesses. The role of IT professionals during the outbreak of COVID-19 made the whole world realize that their contribution will not stay the same in the contactless world tomorrow. The fact is that the rejected businesses by banks still need financial services, and they are forced to look for less traditional alternatives or tailor-made banks or electronic money institutions, which are considered to be more loyal. As a result, businesses lose the guarantees usually provided by traditional banks, putting at risk their businesses, and basically business for the bank is lost, the customer is lost. So this is again where the community of compliance officers, they have this bad flavor in business community. The competition for banks from shadow banks, from new digital entrants, and has challenged the traditional business model in banking, and I hope it will change. The question is what the consequences will be for banks' business model change. The COVID-19 crisis will accelerate for sure the pre-crisis tendencies, as subdued growth and low interest rates will persist for a long time and digitalization will see a large impetus with many new digital entrants. And restructuring in the sector will be needed. So a new economy, online businesses, they create thousands of workplaces, return brainiac software developers to work in their home countries, fill state budgets with huge licenses fees for the state to be able to pay doctors, teachers, and other public employees, develop online tools like remote payments, virtual conference platforms, which is critical in the contactless world.
We're talking about IT technology. We're talking about know-how, and we're talking about digitalization. Digitalization. Sorry.
Okay, so the work of compliance officers should never be underestimated, and we all know that the compliance officers are very regulated, and the policies are very strict. So like tighter compliance regulations have challenged the financial institutions variety of ways. So the first is the cost of non-compliance, and we understand it is most notoriously understood via the fines issued by regulatory agencies every year. Data acquired from Bank Fines Report 2020 includes a total of 9.4 billion in aggregated bank fines last year. And the pace of these fines show no signs of slowing down. Financial intelligence units help compliance officers worldwide, enabling a connection between the private sector within structures enforcing criminal legislation. A key element of functioning of a financial intelligence unit is their ability to cooperate both with foreign counterparts as well as other national institutions. When government fears the people, there is liberty, you know. When people fear the government, there's tyranny, the Thomas Jefferson once said. The fear of legal proceedings and media exposure and personal disgrace should be the main driver of compliance program development. The driver has to be true desire to do what is right and understanding why this matters in long term. Within the bankers, I often hear a certain, a neglection to compliance teams' work, and this attitude might be understandable, as anyone who do not deliver tangible earnings and economical interest are considered as just a part of procedure to put a tick on application form. The fact that compliance teams limit businesses' activities considering some too resource consuming should be taken care with more attention and give compliance teams space for new way to building their strategies of activities and policies. The strategy of accepting new clients, new economies should be more robust and sustainable over time. I will give you the example, the traditional high-risk business, gambling. So what is online gambling today? This is a pastime, online or in-app entertainment, which includes online betting on sports events. To outrun the lazy journalists who love to connect the gambling industry with the very loud headlines, money laundering, addiction, and consequently, we have this image in hats created by the media of a guy who knows another guy who is naked because he has lost everything when gambling. I would like to say that this again more loudly, and that the naked customer is not a interesting customer for online gambling operators today. This assumption about a person who plays and loses everything in one day is misleading and inconsistent with today's understanding of sustainable business. Anyone who is more or less familiar with the intricacies of business sees understandable arguments related to the ambition of any business to develop and operate in the long run and in accordance with the law. The industry that is not publicly loved, but at the same time it is legal, tightly regulated and tax-paying industry with a very polite customer base. Thanks to industry's own initiatives in responsible gaming, customers have become more informed. Customers understand that gambling is just for entertainment purposes, and it's not the way to earn money in any way. Don't get me wrong, I have no illusions about the general mood, both in society and public administration regarding online gambling or other new economies. We need to understand that it is always easy to try to extract funds from these industries. For example, by raising taxes, accumulating additional capital, and support the public. It should be clear to compliance officers as well that objecting against the new economies and industries when it finances the public interest and bring economical gains, at some point those compliance officers will be considered illogical, I think. Most of us understand that dilemmas are rarely black and white. Different priorities and human factors add to their complexity, creating a gray zone of right and wrong, a gray zone of possible decision. Gambling is regularly on compliance and political agendas, and most often when the budget is due or the elections are approaching, that will be clear and understandable. However, it is very desirable for the bank's compliance teams to come up with a discussion or proposals for decisions to be made with the gambling industry. It is no secret that games for money have existed and will continue to exist. The question is whether and how compliance teams, presidents or governments will capitalize on the industry in the given area. There are two versions. The first is to pretend that people will not gamble at all, and they will be when they will be, banned from opening accounts or other restrictions. But we can remember when United States did with alcohol ban first half 20th century and what additional impetus it had, this decision had, creating the development of organized crime. By the way, the total market of online gambling is around 70 billion per year. The second scenario would be better: levy taxes on the sector, maintain effective monitoring mechanisms, protect the public from fraudsters, and similar. The absolute majority of the world's countries have chosen this path. The most difference between the difference is scrupulousness of the approach, rigor of regulation, level of detail. One thing is very clear in this regard: regardless of the option we choose, part of the public will continue to gamble, and industry will need to find alternative to traditional banks. Next is the question of understanding what constitutes appropriate and effective governments in the long-term interest of the public. Most importantly, returning to the naked guy, the companies in the game tech industry are not interested in customers who play everything regularly. This is a very simple business logic. Short-term business benefits from such customers do not overweight the long-term losses. The reputation of the industry suffers, and the public is to blame the entrepreneurs working in the industry. Example could be when there was a ban on online gambling during the first wave of pandemic. It was most probably applauded by all providers of illegal online gambling, non-licensed providers. Licensed online gambling providers do not pretend that gambling does not pose risks, just like any other excess. What's more, they unite licensed online gambling providers. They purposefully deter people who are most exposed to the risks in a variety of ways, from responsible gaming initiatives and code of liability, self-exclusion registers to artificial intelligence, tools that monitor the behavior of industry customers on the gambling websites. They monitor duration of the game, amount and frequency of deposits, amount of losses, return after self-exclusion, etc. Last but not least, as soon as trends are identified and the risks are seen by compliance staff, they created, the action is taken. The alerts are put, the customers are contacted over the phone, and the accounts are blocked for such customers. These initiatives are purely industry-led and basically not required by law in all the regulated markets. And someone might argue that these legal initiatives in the interactive gambling industry are just being ticked so that the industry looks better in the eyes of stakeholders. However, this will not be the case either. The clearest example of this is self-exclusion register, in my opinion. In short, this means that everyone has the opportunity to register themselves as excluded from gambling, denying the access to online gambling. Even relatives, my husband, can register me in this register. The interesting number here is that after more than 1 year of legalization of gambling in Ukraine, for example, we have in Ukraine, we have only 70 people in Ukraine who filed themselves as self-excluded. And I hope you can think of yourself 70 self-excluded people versus 400,000 active players per day on one of the top licensed online platforms in Ukraine, and this is a low number. I have not heard of similar initiatives of self-exclusion in other high-risk sectors. The introduction of these registers, the usage of artificial intelligence, the solutions that are being used by new economists, the high-tech economists, generally they create better perception of compliance teams of the industries. But still, there is a lot of work to be done to have a more open mind on the industries. In regards to another popular topic of money laundering in new economies, we need to understand that certified online platforms, they do not give space for laundering money. There is not even a physical possibility to insert money into the system and then transfer it, for example, to another account or insert money to the system and withdraw it without enhanced due diligence. So basically, if there is the alert by the system, by this online platform, the licensed provider platform, not people, but the certified online platform, they keep record of each transaction and has the records available for any financial intelligence units and suspicious transactions report and regulators. Among top online betting firms in the world, we see Bet365, British online gambling giant. They employ 5,000 people for now and are headed by Denise Coates, also UK national, Miss Denise Coates. Then Entain, previously called GVC Holdings, which employs 30,000 of employees now. They are headed now by Miss Ette Nygård Andersen, the Danish executive and CEO of Entain. Parimatch, 2,500 employees, owner Kateryna Druzhynina, young progressive Cypriot business executive. Betfair, after merger with Paddy Power, they have employed 11,000 employees, and they are headed by Andrew Black. All of these young European entrepreneurs created high-tech platforms for entertainment, which are licensed, including licenses in strictly regulated jurisdictions as United Kingdom, EU zone, And this is amazing. Algorithm for compliance teams who build sustainable strategy in banks is very simple, in my opinion. Licensed IT businesses, new economies, or just IT businesses with audited financials, clean auditor's opinion, and UBO's source of fund have to have the chance to pass the due diligence with the banks. License means regulatory compliant. The audited financials with clean auditor opinion means financially compliant. They considered high-risk companies are ready to help the bank's compliance teams to understand the businesses inside out. Decompose the risk for banks by providing comprehensive and verifiable answers to the questions. What is the activity? Who are the owners? Who are the customers? Who are the contractors? Elaborate every aspect of the business and provide any supporting documents they need, because the new generations that are more structured, well-structured than it was before. So it is time, in my opinion, to shake off the negative connotation of the term high risk. That same high risk will most certainly drive fintech and traditional banking growth over the next 10 years. The prognosis of poor compliance, if left untreated, it means loss of businesses. In fact, we are better off to prevent the disease in the first place. So let's move forward the better future, capitalizing on industries, taking care of long-term public interest. And the most important thing is for us compliance officers to not be lazy, be open-minded, and learn how to distinguish the licensed certified leaders of the new economies from the unlicensed non-compliance with players. I hope that today we made a small step toward understanding new economies, new businesses. And I thank you for your attention, for your time, and we'll gladly answer all of the questions.